Hello active traders, I'm Ken Calhoun from TradeMastery.com with the channel that's dedicated to helping you become more successful in your active trades. Now in this episode we've got a very special 7 question and answer session coming up with questions that traders asked from around the world for how to trade small cap under $10 stocks for swing trading the right way. You know, when I think back to all the small cap swing trades I've made over the years, the stocks under $10 a share, there's some very important differences in how those should be traded compared to stocks that are more expensive in the $20, $30, $40 and up share price. Especially as important is the consistency of the trend, the volume, and the very specific patterns that you want to look for before and after you put on a trade. So let's get underway with our questions. Question number 1 from James. Do you look at daily charts to see if they're in a strong up move or just stick to the 15-minute charts? That's a good question. I use 2 types of charts for both the small cap as well as regular charts. It's the 15-day, 15-minute candlestick chart, so I can see the nuances of the trend directional strength, gaps and breakouts, and a close-up look at the volume. The other chart that I use is a 90-day daily candlestick chart. What that does for you, you may be familiar with the phrase multiple time frame analysis. It's really important for you to take a look back, take a step back at the 30,000 foot view, so to speak, on the 90-day, the 3-month daily candlestick chart to see the overall technical picture. To make sure you're not buying right under previous major resistance, for example. Question number 2, Robert wants to know, he says, I've observed that small caps value increase faster if you enter at the right time. He wants to understand when is the proper time to buy and how to find them at the beginning of their upward movement. Smart question. One of the big differences that you'll find in trading small caps, and by that I just mean stocks between say $2 and $10 a share, not penny stocks, but things that have reasonably strong volume. The key for the entry signal is to look for a new price action breakout combined with high volume in context of an overall uptrend. So volume confirmation is especially critically important, much more so even than the regular $20, $30, $40 a share type of price range stock. Question number 3. Leonard wants to know, what's your criteria for scanning stocks that can then be possible trades that may coincide with possible breakouts? I've got several criteria. One is they need to trade at least 500,000 shares, preferably 1 million shares or more, but at least 500,000 shares or better on a daily chart. So make sure that it has at least 500K volume. The other criteria is preferably a point or more of range. So a stock that has, say, goes from 4 to 5.5 is good, but not a stock that on a 15-day chart only went from 4 to 450 or 470. That's not quite so good. So minimum 1-point range and a minimum 500,000 shares volume on a daily basis are 2 of the scanning criteria, in addition to all the breakout patterns like gaps and ascending triangles, acceleration ramps, and the rest of it. So smart question. Question number 4. Peter wants to know, he says, great video as always, thanks. He says, ADX over 40 buy-in was new to him. He's referring to one of my earlier videos that I recorded. I was under the impression that ADX over 40 implied a potential exhaustion. No, I use ADX differently than the original interpretation, and I've trained traders, thousands of traders in my public speaking and articles on how to use Wilder's Average Directional Index as a volatility breakout signal. And I just look for a red ADX signal line with the standard 14-step parameter, but the ADX signal line breaks over 40, and we look for an entry on a day subsequent to that if and only if it takes out new price action highs. So question from 1, what's the main advantage compared to trading large cap stocks, since large caps can be traded for less than 100 shares lot? And I understand what you're saying. You can trade like a $40 stock of 10 or 20 shares, which is what I advocate. I think that's fine. The biggest advantage to trading the cheaper stocks is simply leverage. You know, it's more affordable for a lot of traders to do, say, 500 shares of a $5 stock than 500 shares of a $50 stock. So it's all about leverage. but that can cut both ways. The potential profit is much bigger in the cheaper stocks, but so is the risk potential because of the leverage. It can cut both ways. So the key is, at least that I found in my own personal trading, over all the years I've traded the small caps, the experience that I found is you have to trade instruments that have a good, strong directional trend on a good, high, sustainable volume. So you're not trading pop and drop penny stocks or pop and drop haphazard, thinly traded, low float, dangerous stocks. There's safety in numbers. So you want two V's, volume and volatility. So that's kind of the trick, and that's the advantage, to answer your question, which is smart. It's all about leverage. And also you can trade more instruments. It's more affordable for most people to trade, say, 6 or 8 instruments at a time, like I advocate, and like I do myself. I was like trading a basket of stocks. That's more affordable if you're trading lower priced ones, because it takes less capital up front. You still do not, however, at least I do not like to trade 1,000 or 2,000 or 3,000 shares of cheap stocks, because that's very risky and speculative. I still prefer small trades that I then position size or scale into over time. So, good question. Next to last question, Don. Intrigued by your small cap approach, he says, I'm interested in seeing your liquidity requirements, spreads and volume to ensure efficient exits. Well, at least I found in my own trades, again, back to the 500,000, preferably 1 million shares per day volume threshold, that helps tighten up the spreads, which is another reason why you should never trade instruments that only trade 50 or 100,000 shares a day, because the spreads may be a nickel, which is going to kill you trading a trade $3 or $4 or $5 stocks. So you want 1 cent spreads or 2 cent spreads at the most, and the way to get at that is to trade higher volume instruments, combined with wide trading ranges of at least a point or better in the $2 to $10 share range. So that's a good, smart question, and hopefully a good, intelligent answer to keep you on the right side of things. Our last question comes from Jim. Any indicator most useful for this kind of trading? It's all about explosive new breakouts. So price, action, and volume are always going to be my favorite tools to use as a professional trader. So volume, however, is much, much more a factor. 2 or 3 times is more important to use volume correctly in the $2 to $10 share range instruments than it is for the $20, $30, $40, $50 share type stocks. So volume is the critical indicator to use correctly, and you'll be learning how to do that in my small cap scans training service. So really smart questions. We had 7 questions. I'll be covering more in upcoming videos, just in the interest of keeping this short and sweet. I covered the first 7 questions that traders from around the world wrote in. Be sure to go to www.smallcapscans.com, or you can go to my trademastery.com site. It forwards inside that site. But to keep it easy to remember, to bookmark smallcapscans.com, and I'll have updates and new videos there. But we're now enrolling for that service. There's monthly, quarterly, and annual plans with a really good discount on the annual. So that's why that one's been popular with so many traders as we've launched this. I put a lot of work into this service. It's my biggest service in 3 years, my biggest new service in 3 years that I've launched after trading the open and swing scans and so forth. So small cap scans, particularly suited for those traders who may be on a budget or just like trading the lower price $2, $3, $4, $5, $6, $7, $8, $9 instruments. So between $2 and $10 a share, under $10 is what we cover in small cap scans. So I hope that gives you some answers and some clarity to keep you on the right side of your trades. You know, I'm here for you folks. I've been here for so many years, since 1999, trading the world's traders in lessons learned, basically, in my own trading experience. All my live real money trades, the before and after, is what I capture for you in these types of services and courses that I offer. So go check out smallcapscans.com, or just go to trademastery.com, and the link's there in the site, in the menus. And until next time, trade with passion, or at least intelligence. Trade with tight stops, play a basket of instruments, try and make as much money as you can as a trader, and let's go get them. Take care, and best wishes for success in your own personal trades.